And then that person can take that advice, execute on their own, or we can execute for them, and they have a platform where they can view their transactions, the progress towards that target, the investment performance 24/7. That's what we do. Thank you.
Hi, as Patricia mentioned, my name is George Spensos, and I'm also on the board of directors of the CFA Institute. And just to give some perspective, the CFA Institute is the global body of investment professionals. We have about 150,000 members globally, including over 150 societies. And one of the biggest growth societies is here in East Africa. Last year, the membership has grown from just under 40 a few years ago to over 130. Last year alone, the growth was 29%, which is the highest growth in the whole EMEA region. But the really good news is that there's a pipeline of about 900 candidates that are writing the CFA exams. And for the CFA Institute really represents two things: a commitment to education and a commitment to ethics. And to see this growing group of educational investment professionals in the region is very exciting to me.
Hello everyone, my name is John Kamara. I'm basically an entrepreneur and also a serial investor in a number of different industries, all driven by technology. And one of the things that I was talking about today here is blockchain solution, cryptocurrency and ICOs around the startup industry in Africa and the opportunity that blockchain offers the African continent, but also a lot of young people to take advantage of this opportunity to be able to then build, the companies of tomorrow that we need. And I think that without a doubt, financial services, the financial industry is a very important part of the blockchain explosion, the ICO explosion, and also the explosion of cryptos or tokens, whatever way you want to call it. But like I said in the room, either they like it or not, it's not going to go away. So we either embrace it as Africans, figure out a way to make it work for us, or we sit back and just wait. Thank you.
Are there any questions so far, or we? Yes, go ahead.
My name is Stefan Willis from Radio Citizen. I have a number of questions, but I just asked one by one.
Okay, go on.
And the first one, from the discussion so far we've seen from the forum, you've talked of the need to have more education about financial technology. And what maybe would you suggest should be done beyond this? People in finance, and I didn't see 5 hands. So what needs to be done to get people to understand?
I think around what Patricia has done is more knowledge, more conversation, because any information sits down to the public via conversation, consistent conversation at very top level, and also at a level of understanding, because I think a lot of what's been happening with blockchain and crypto is around the development space. People around the technology space have been talking about it, but the financial space has been completely excluded from that conversation and other sectors. So I view that, if you look at the countries like Malta, in Malta there's a clear idea of structure. There's blockchain around legal, because there's also the legal part of blockchain. So you have lawyers who do lawyer conferences, summits on blockchain, teaching people around the legal enterprise of smart contracts in blockchain. Then you have the whole financial sector talks about blockchain from a financial perspective. Then you have the tech sector, and you have marketing people also talking about so, but they all come together consistently to now discuss how each party can help themselves to actually find ways to move blockchain forward or cryptocurrency. So, and then that allows the regulator to have a better conversation with everybody, because everybody's now involved in the ecosystem. But where the ecosystem is done in silos, that's why we have, this problem where somebody will, some parts of the ecosystem do not understand, what is happening, and some parts understand it very well. And so it's difficult for us to bridge that gap. So we all need to have consistent conversation as groups. And I think the CFA has probably led because of the type of people that we have in the groups. We're talking about finance, technology, and also branding. And I think that's probably how we do need to start to begin to engage this conversation.
Yeah, if I may add to the CFA program within the curriculum, it's an always evolving curriculum, and one of the things that there's been a real push for in the last few years is topics that have become of more interest to the population. ESG, so that's environmental, social governance topics, but also financial technology. So these topics are being incorporated now into. When I studied the exam 20 years ago, these topics weren't in the curriculum, but now they will be in the curriculum. So it's an ever-changing curriculum to meet the needs of the investment environment.
Again, I apologize. Paul Muthaura was not able to join us today, so my apologies for that. But one of the things he talked about when he gave his opening remarks is, as the CMA, they're now recognizing, we can always start asking for regulation to push things. As John said, technology is already moving forward. This technology is happening. It won't stop. Regulation will catch up. The challenge to us as investment professionals is, what are we doing about it? When I get a phone call that asks me, is this cryptocurrency? I mean, we all saw it on Facebook. Is this cryptocurrency a pyramid scheme? What is this blockchain? What does it mean? We all reacted that way when we first heard about M-Pesa, but that didn't stop M-Pesa from happening. So as he says, if we start understanding and bringing groups together that have those multiple disciplines and synchronize that conversation, it will make a difference. Yes.
My name is Abel Muhaji from the Standard. Probably just because we've started a conversation with regulations, just like to...
As I said, our main sponsor is Capital Markets Authority. At no one point has Capital Markets Authority come to us and said, we're not going to regulate this. If anything, and as Paul mentioned, they have been awarded the top innovative regulator within the continent. That in itself tells us that the challenge is not the regulator. We have ETFs in the markets, we have derivatives, we have real estate investment trusts, we have all these products in the market. Why aren't we consuming them? So your challenge to the CFA Society is very right. Now, as CFA charter holders, we rely on analysis, we rely on understanding data. So we are pushing back to our members and saying, take the time to understand, research, use that education. You have the right skill and platform. Equities, bonds is no longer enough. The market will happen. People will make money. Can we be involved and make that? And can you trust us? Our markets are built on trust. Cryptocurrency is a trust game. If you don't trust the advice that we give you as an investment professional, why would you trust anyone that says regulation? The front page of our newspapers today is talking about a fine to banks. If you can't trust your bank to do the right thing, how will you trust cryptocurrency that's in the cloud? How will you trust him with his IT platform? So we need to strengthen that. I think the regulatory framework is strongly in place within the region. I'm not just talking about Kenya, but the challenge for us is to take that a step forward in terms of implementation.
And I also think, just to add to what she's saying, that if, I'll give you a perfect example. My sister, she's in her 50s, came to me one day and said she's buying Bitcoins for a group of people in decimal point day. There's about 10,000 people that she has in her group all over Africa on WhatsApp, and she's buying Bitcoins with them. And I asked her, what are you doing with this stuff? And she's like, no, we're just keeping it. Now, she has no understanding of technology. She's not a finance person. She's just a regular individual. Mm-hmm. If she goes and takes that risk to buy Bitcoin from people she does not know in Asia, even while the government is saying, no, do not buy Bitcoin, she's not listening, because she's thinking the government doesn't want her to make money, so she's not listening. If she can do that, and we as so-called experts, or in the financial sector experts, we're not progressively trying to find a way to bridge that gap, That is where the disconnect lies. Because the masses, anything that the masses have already adopted as a service or a product or something that they're interested in, the big challenge there is if we don't react positively in a way that helps those masses, because we have an objective to protect people, which is what regulations are there for. But if you tell, it's the same way when you tell a child, don't do this, what does the child do? They're going to do exactly what you told them not to do. So it's your job to protect that child, rather than saying don't do this. Let us understand why you want to do this, how you have to do this, and if you must, how can we protect you in this ecosystem? I think that's where, when the president here announced the task force on blockchain, that's probably the first place, apart from Mauritius, it's the first country in Africa that's openly come out and say we are willing to try and find an answer to this growing concern called blockchain, cryptocurrencies, and ICOs.
Yes.
Yeah. My name is Kimani O'Brien with KBC. I have three questions. How big is it then, number three, in a market that is highly dominated by M-Pesa, T-Cash, and what have you, how easy or how hard is it to crack this market?
One of the things that... Sorry. Keep switching. How big is the crypto market? I think there was a statistic that was saying that about 163 billion shillings was tied into Bitcoin, which is one of the cryptos, Kenyan money, as of last year, which is, I think, about 3 or something percent of the GDP, comes around that. That's a whole lot of money. To be in Nigeria, we know that through some data that we got, at about $40 to $50 million every month of crypto is bought in, and that is by what we call the lower middle class. That's the data that we have, but not even the upper middle class, because a lot of people hide what they do, but the lower middle class are quite happy to give you information about what they do. So that kind of tells me, if you extrapolate that number and you do a few analysis, that it's quite a big market in terms of the growth rate. Now, with cryptocurrencies and the position that it has, again, define two things. There is blockchain, which is the technology, and we must all embrace blockchain, either from media perspective to lifestyle to entertainment to finance. Blockchain helps us as a technology to do things better. As simple as that. So that is different from cryptocurrency, and I think the problem has always been, when we talk about blockchain, people just think Bitcoin. Bitcoin is not blockchain. Bitcoin is a form of blockchain, which is based on the financial market, which is why it's called a crypto. Blockchain can be used for a number of different things. We've seen it: healthcare records, medical, financial services, privacy records, transparency in financial peer-to-peer. So it's a technology like any other form of technology. But with cryptocurrency, the problem is that we have quickly gone to the idea that cryptocurrencies will take over fiat currencies. That people will stop using Kenyan shillings and start using some currency created. That's not really the idea around cryptocurrencies. It's a form of transaction that still lives side by side by the fiat world, but it allows us to do things quicker, better, and also allows people to be able to create more value within specific ecosystems. So if we understand this, because like I said, when people buy Bitcoin, what do? They want to cash it out into real money, don't they? Because they can use real money to buy a house. You're not going to sell your house with Bitcoin, are you? But if you're a real estate agent and you build a property and you raise money and you decide, I want to use Patricia coin to only buy in my real estate, I am creating a currency that allows me to do things within my ecosystem. So if you want to buy my house, please take your Kenyan shilling, change it to Patricia coin, and come and buy my house, because I feel it gives me better value. Part of it is also, I feel that I don't have to pay much taxes if I use Patricia coin. That's part of the reality that also a lot of people are using to, when they go into cryptocurrency. So you can't just change fiat currencies and say we're removing all fiat currencies and we're going to go into it. It doesn't work that way. But cryptocurrency is something that's here to stay, that's going to give us more value. And when we talked about ICOs, for startups, tech companies, even businesses here, using the idea of blockchain and creating token generation events, which is sort of cryptocurrencies, helps these companies to raise fund in a completely different way. And that is really what we must focus on. What can you do for our startups, our businesses, rather than are we trying to change the Kenyan shilling for Patricia coin?
Cool. John is going to be here if you have questions that are cryptocurrency related. If there's anything else around the fund management, development, or the CFS Institute, it's a good time to kind of also introduce that conversation.
Yeah, maybe we take turns at this seat.
Well, let's see what questions.
Yeah.
Okay.
Probably just before you take
Before he moves, okay.
A last question on the issue of blockchain.
Mm-hmm.
Does it concern you that central bank governor is on record championing for blockchain and not expressing his faith on cryptocurrency?
Say that again?
Does it concern you,
Uh-huh.
you know, as experts in the cryptocurrency
Yeah.
segment? The central bank governor has been championing for blockchain and has expressed his faith on it, not on specifically on the cryptocurrencies. And what is your feeling about that?
I think it's a good thing. He's championing for blockchain, which is a technology, right? Is that what your question is? That he's championing for blockchain but not championing for cryptocurrency?
Yeah.
Again, like I said, I think let's even start from blockchain. Let's all adopt what blockchain can do for us as people, as Africans, and how it can help us grow our economies. Cryptocurrencies, crypto generation events, they will come to play as people understand legislation better. And like I said again, there is a way that we use cryptocurrencies within ICOs that doesn't necessarily, again, the disconnect is when the central bank says that, people think that we are going to replace the Kenyan shilling with Bitcoin. That is not the objective. Nobody's trying to replace the Naira or the dollar, but what we're trying to do is create a virtual world of currencies where we can do things in the virtual world, create value, and then still be able to transact with the real world. And I think until we understand that, which will take some time. So as a tech person, I don't really get bothered too much about what the legislator says or what he doesn't say, because I also understand they need knowledge a little bit about the real intricacies of what we're talking about and the part of the project that we're talking about, because you can't just throw something at somebody who doesn't really understand it and expect them to make an informed decision. So the central bank, everybody needs knowledge, and the more knowledge they get, the better decisions they will make.
When you look, still on that area of cryptocurrency, because we can't run away from it. It's a reality. It's happened. Here like these, whereby now you're talking about 163 billion shillings. What are some of the gray areas that you think the authorities should first of all focus on? To ensure
Authorities should do is first get education, a lot of knowledge. Malta took time to understand what cryptocurrency was, where it was coming from, why people were going to use it, and how it would live with the fiat world first. And once they do that, then also the regulators should have conversations, dialogue with people who want to build cryptocurrencies or who want to do token and understand again what it is, what is the value. Because for you to write an effective regulation, one of the problems in Africa, we've written regulations in silos. We do policies by experts without consulting the real people who actually use or who will use this policy, and those policies never translate to reality. So the regulators do need to converse with the people, and who are the people who want to create this is the tech world and a lot of the people in the financial sector. So if you don't have those conversations with them to understand, I give an example earlier on. I went to a bar to dance. They asked me to buy a token to enter inside to buy a beer, because that's the only thing I could use in that space. Now, in that same space, there was a woman who was selling clothes, and she would accept that token from me because she's going to get paid her money back when she delivers the token to them. The guy who has the token is an exchange, because she takes the token back to him and he gives her real money. These things exist already. But it's just the magnitude at which it's happening is what is disrupting all of us at the moment. So the regulator has a job, and I think regulators are very quick to say no. The idea is because when you say no, you're also defeating the purpose of what the technology could have done for the country. And again, I'm glad that the president came out forcefully and said, we will look into this. And that is the first thing to do.
Okay, moving on. We'll get into you guys. Aiko, do you have any questions for Aiko Godia on fund management? And on CFA Society? Okay, we can probably take 2 more questions and then we'll call it a wrap. And then you can target whoever you want for the next bit of the session. Any 2 more? Even on the same, that's fine.
Yeah, just ask my question in response to the one you can possibly do. Again, I bring you back to the elephant in the government regulation. And first, I feel it's a shame that we didn't have any government representative who would consider here. And first, we've seen you welcoming that the government is paying attention to blockchain technologies. But my question is, isn't it ironic for government to try and bring in regulation when the whole foundation of blockchain technology is based on the lack of a central governing authority? And just around the same question, the task force formed. There have been fears that this task force is out to bring down the advancement of blockchain technologies in the country, and what could be a response to this? And then my other question, I think this one is more specific to cryptocurrency than of blockchain technology. We've seen the opportunities blockchain technology represent for the country, and that is clear. But with regards to cryptocurrencies, there are people who see it as a bubble which is likely to burst because it's based on demand and supply. Essentially, there's no. Basically, you can put out an ICO today, and people can jump across all currencies, leaving one particular currency. Let's say the Bitcoin, you go to Ethereum and leave Bitcoin exposed. And there's been fears that the whole entire cryptocurrency trading is a bubble that in the past, but so far we haven't seen it burst.
Yeah.
What going forward? How do you do that?
Take your first 2 questions into one. Blockchain technology, it's a technology. I don't think the idea for the government is to regulate blockchain. You can't regulate Qt software. Qt software is a platform that you used to build. You can't regulate. It's to understand how they can implement it in everyday life. I think that, in my view, that is what the task force is set up to do. You cannot regulate technology because technology is ever evolving. The use of technology is what you can regulate. Is it used in financial services? So how does that place meet financial services? So what does that technology mean for financial services? So how do we regulate the financial part of what that technology does? That is when you start talking about regulation. So if you look at countries that have created licenses for what we call ICOs or tokens, they have not regulated the technology because it can't. They've actually, Mauritius is building a blockchain center of excellence to train people how to use blockchain, to train people how to go into the world and develop blockchain so that you can go and hire people from Malta to develop all your blockchain solutions because it's a technology that's going to evolve anyway. Since IBM and all these companies are beginning to use blockchain, but the cryptocurrency part of it, which is just one layer of blockchain, just one layer. And when people talk about cryptocurrency, I think all of you mean Bitcoin, if I'm correct. Everybody is, Bitcoin. There are over 1,000 cryptos. Some of them are useful, some of them are useless. Okay, but because Bitcoin was the first one that got value, everybody, when they talk about crypto, if I could go into your mind now, I know you're thinking about Bitcoin. That's where your focus is. But there's so many other cryptos where, like I said, the reason why cryptos are created is because companies decided that we want to get funded, but we need something that we can give back to George, who is an investor. So I'm going to create a pseudo-currency within my ecosystem. Now, some other people saw an opportunity and say, we will create an exchange where you can take that currency and change it into fiat because this is what we call the value. What is the value of a cryptocurrency that I create? Is the value that I think of what my project is. When I say my currency is 1-to-1 with a dollar on the day of creation, it's really my value. So this is where the government comes in to say, okay, it's now gotten into the financial sector, into a sector that's part of everyday life. Okay, how do we manage these exchanges? How do we regulate these exchanges so that when you are about to create, what Malta is doing, when you're about to create a token, there's a sort of license that says for you to be able to create a token, this is what you must meet. So that by the time you take it into that exchange, you already have met the basic values of what that token should represent. And I think that's what's going to happen. Again, you can't expect governments. Some governments are farther ahead than the other because they started understanding cryptos quicker. And, so I think Kenya in Africa is probably also one of the more progressive ones. And I do believe in time they will get there. But it's not going to go away, either they like it or not. So they will get there, and I think they understand that.
Okay, as we close off, just to protect my friend, the chairman of the task force, Pitagin Demo, I think they've actually done a good thing. I think one of the statistics that was just released today is on the land registry, that just by automating, you've gone from revenues of 800 million to 9 billion shillings. So I don't think the task force is there to stop this process. And as I said, from Capital Markets Authority perspective, they're actually very keen to get us involved as investment professionals in starting to close that gap. The conversation he just had of 1,000 cryptocurrencies, that's the same thing as any share on the stock exchange. You don't buy all the shares on the stock exchange. You don't just buy one share. You have to understand why you're buying it and what is under what you're buying. So on that basis, I want to thank the panel and all of you for being here. We are truly honored, and I wish you a very good day. And if you want to continue the conversations, please feel free to talk to any one of us. Thank you.
Thank you very much.
These are bonds or promises that the government issues when it borrows money from the public, that they will pay them back with a return, and in exchange that money is taken and used for investments. So, for example, Kenya has infrastructure bonds, sovereign bonds, and these particular securities are designed to invest in the building of roads, bridges. For example, the rail that we've seen built from Mombasa all the way to Nairobi, and it continuing on towards the Ugandan border. That's an example of something that is funded by an infrastructure bond. Thika Road is another example that is funded by a sovereign bond. So they are ways of investing in the economy to help grow and boost the GDP of a country.
So you're talking about infrastructure bonds as what the government has invested in, but what other forms of sovereign bonds would you expect or would you have?
So another version of a sovereign bond is a Euro bond. So Kenya has currently 4 Euro bonds that are active. We had two successful Euro bonds that were listed this year. And these Euro bonds were extending the tenor, the duration that the government pays for or borrows the money before it has to pay back to whoever lent them the money. So these Euro bonds, again, are usually borrowed with a specific project in mind that probably requires foreign capital to use to develop, and no need to exchange the currency. However, even local projects can be covered by this, and the government is free to choose how to spend it in forms of development. On top of that, we have short-end instruments. These are known as bills, treasury bills. So these tend to be for short-term commitments and expenditure, usually plugging the gap where the budget might fall short. For example, they will take the short end. But the short end is not really aimed for development because of the nature. They have to pay it back quickly. So they tend to borrow long term, where you spread your risk and also your repayment, and it's less pressure on the fiscal economy of the country.
Talking about spreading the risk and a longer period of repayment, within the context of the Kenyan Euro Act, what sort of time are we looking at in terms of how long you would take to repay equity?
So a typical example is a 30-year bond that has been issued. So that means you will pay the coupon or the interest every 6 months or so for the whole 30-year period. That is the return that the investors are getting. But the bulk of it, the weight of the loan, so you know, the 4 or 5 billion, whatever it is that a government is looking to raise, that doesn't have to be repaid for 30 years. And as you know, time value of money, $1 billion today can do a lot more than $1 billion in 30 years. So the idea behind this is, utilized well, not only will the money generate the resources to pay itself off, but will leave the country and the economy at a higher level than where it started when they took the bond from the market. So that is the idea of taking a longer tenor bond. So example is a 30-year. The ones that are maturing, there was a 5-year, there was a 7-year. Those are considered to be medium to short term in the bond space. And 30, 20, 15 years now are looked at as slightly longer. And that's what Kenya was doing, restructuring so that they have more room to generate returns for their investment.
Let's look at, when you're talking about a loan, obviously there is a question of interest rate. And therefore the question becomes, what is the rate, if you like? Is it on a reducing balance? Or how exactly does it work in terms of working out the interest rates?
Okay, so the interest rate basically, or the coupon as it's known, is what the government promises in exchange. So that's the return for the investor. Now, because they have two types, the Euro bond, which is dollar denominated, and there's also the Kenyan shilling, the coupon rates tend to differ. The domestic market tends to be looked at as more volatile, more risky. So the return on the currency is always higher when you peg it to things like inflation and other things like that. And a typical example for the local currency would be anything between 10 to 14%, for example. Whereas the Euro bond, the last two were successfully issued at 7.5% and 8.5%, which is considerably cheaper. But when you look at it from an international perspective, it's expensive because America is able to issue a similar debt at 2.5%, maybe 3%, as opposed to Kenya because of the risk perception. So you will find that, for example, the country rating or the sovereign rating for the Kenyan government is lower than that of the US government, and therefore viewed or perceived as riskier, and this in turn leads to a higher return on the coupon. So these are some of the ways of calculating the return. But at the end of the day, it benefits the country to have the coupon rate as low as possible, because it's debt. And the lower the debt, the better and easier it is to sustain it and to fund it.
But what then would be the rationale for government of Kenya to go for a Eurobond if you could get a similar facility with the US at 6 points lower, percentage points lower? What would be the rationale behind that?
Well, locally, the interest rates are quite high. Of course, the Eurobond is cheaper. But you can't put everything on Eurobonds because there are certain factors that you have to consider, and this is your foreign debt exposure. So there are checks and balances in place that limit your exposure to foreign debt to a certain percentage of your GDP. So as much as it's attractive in terms of costing, you have to factor this in. The other thing is it also affects the currency, the foreign exchange, because whatever you convert, you must buy back because you have to repay people in their currency, in dollars. So there is also the element of destabilizing the currency to a certain degree. So these kind of things limit the amount of money they can go to international markets. And also, I mean, international players, if they see you just taking and taking and taking and you're not, in a foreign currency, they'll also ask questions. So you also have to show some level of discipline as a government. Ideally, local funding